Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Extremely strong cues coming out of global markets this morning, and looks like the bulls are as charged up as our men in blue. In fact, given the fact that we saw such a good match panning out yesterday with India decisively defeating South Africa by over 240 runs or thereabouts. But of course, we'll be talking about that in a bit. We'll also be getting you a lot of insights into what to do with stocks that have reported their numbers over the weekend. We'll also be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed, and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street clocks its best week of 2023 with key indices notching weekly gains of over 5%. US jobs growth decelerates in October, easing fears of further rate hikes and driving US yields lower. Asian markets kickstart the week on a strong footing as a softer than expected US jobs report eases concerns over further rate hikes and bolsters sentiment. The GIFT Nifty is hinting at a higher start for the Indian market. In fact, we could look at levels of over 19,400 mark today. Oil edges higher after Saudi Arabia, Russia stick to output cuts. This after over 2% fall on Friday. Demand outlook remains uncertain on the back of Israel-Hamas conflict. Brent, in fact, this morning is trading around that $85 a barrel mark. SBI will be in focus as as its second quarter numbers beat estimates. Asset quality comes in at its best in 32 quarters, while loan growth remains in line with estimates. However, margins are at a 5-quarter low, but the decline is lower than what was being expected. Meanwhile, Bank of Baroda's profit beats estimates, but margins here as well come under pressure. Guidance for the same has also been cut. Among key earnings to track today, pharma major Divis Labs will be releasing second quarter numbers today. From the broader markets, also watch out for numbers from HPCL, Bharat Forge, as well as Nykaa. And India thrashed South Africa by over 240 runs with birthday boy Virat Kohli notching a ton and equaling his ODI 100 record with the batting legend Sachin Tendulkar. With this victory, India has sealed a spot in the semis. Well, without any delay, let me bring on board our first guest for today. Joining me is Nandita Khemka, who's the head of retail research, broking and distribution, Motilal Oswal. Joining in this morning. Great to have you on the show, Sid, as usual. But, let me first ask you about, the sentiment when it comes to the market. We have kind of, recovered from the lows that we saw. We had slipped below 19,000 at one point. But now we are knocking at that 19,400 mark, as is being suggested by the GIFT Nifty. Heading into Diwali, what is your own sense of where the markets are headed from here? Siddhartha, I think you have to put yourself on unmute.
Yeah, I am really sorry for that. So good morning, Nandita. Thank you and wishing all the viewers a very happy and prosperous Diwali in advance. So if you look at going into the new Samvat, or you can say the New Year outlook, markets have kind of recovered from their lows. What has been the biggest concern have been on the global front, be it the high inflation, the higher interest rates, and the bond yields, and to top it all, the geopolitical issues from last years of Russia, Ukraine, and to now the Israel-Hamas war. So I think if you look at on the other side, on the domestic side, things have been pretty strong, right from the macros where the GDP growth has been pretty good. Among the highest growth that we have clocked compared to a lot of these emerging and global markets. In terms of the GST collections, the tax collections have been pretty strong. If you look at the micros, that is where bulk of the focus of the market is. And in terms of earnings, we have seen 2-3 quarters of consistent earnings growth, and the ongoing result season, that is the second quarter of FY24, has also been pretty good in terms of overall earnings delivery. And as expected, banking, auto have been leading from the front in terms of delivery. So as we get into the outlook, as I said, markets likely to remain in a broader range with a positive bias given the domestic tailwinds. However, the global interest rate cycle, which will be a key monitorable going forward, will determine whether we go into a sharp upturn or will be in a sluggish upturn.
All right, you mentioned earnings as well, Siddhartha. Of course, we had SBI reporting numbers over the weekend. Margins have, kind of dipped, but the fall hasn't been as, as per expected. It has been lesser than expected, right? But operating expenses have seen a sharp jump. Going forward, how long do you expect the margin pressure will continue for some of these public sector banks? Of course, deposits are getting repriced. Of course, there are higher, provisions for employee costs as well. Going forward, how do you think the rest of the quarters is expected to pan out for the likes of SBI?
Yeah, Nandita, I think, as I said, banking was a sector which was expected to report very strong numbers, and they have delivered on that front. Some of the banks have delivered, in fact, better than expected numbers. Coming to SBI, another steady quarter. Net profit was higher than our expectation, aided by the lower provisions and write-backs. Although on the operating front, there were wage revisions and the company made provisions for that. In terms of the overall NIMs, definitely that is something that is expected to remain, you can say, under pressure for some more time. For the industry as a whole, we are not expecting any NIMs. So we are expecting that NIMs have already peaked out. From here, even if you look at what the company is saying, that they could the domestic margins could contract further by 3 to 5 basis points because of the rise in deposit cost. But that is much better than what some of the other peers are reporting in terms of 15 to 20 basis points compression in NIMs. So I think on an overall basis for the industry, NIMs will continue to remain stable to marginally lower than what we have seen in FY23 and the start of FY24. But the good part is that the business continues to be very strong. The advances and deposits growth for the industry as well as for SBI continues to remain strong. So we expect that, yes, there will be, in terms of operating expenses, will be high, especially because of the wage provision, which is effective from November 22. And that could impact for SBI, particularly the pre-operating profits. But as I said, asset quality remains healthiest, and they have reported almost the decadal best asset quality. And if you look at return ratios, they are consequently improving to 1.1% ROA and 18% ROE. And for that, asset quality and the growth valuations are still comfortable at less than 1 time price to book. So we definitely believe that within the PSU space, SBI could be the best pick. We have a target price of 700, which is almost more than 20% upside from current levels.
All right, 20% upside on SBI from current levels. What about Bank of Baroda? Of course, you mentioned that SBI is the best poised, but Bank of Baroda has also reported good set of numbers. However, margin guidance has been slashed. And of course, there has management has said that there won't be much impact of the ban on BoB World app. In fact, on onboarding customers on BoB World app, right? But going forward, do you think a significant impact is something that we can expect on BoB?
So if you look at BoB, again, we believe it was a mixed quarter. While the pre-provisioning profit grew 33%, which was aided by higher other income, margins were where there was a negative surprise. Margins declined 20 basis points to 3.07%. Business growth, as we see across banks, has been pretty healthy. A loan growth of 19%, deposit growth of 15%. Asset quality also improved. Now, the only concern that I see for BoB is that due to the restrictions that have been imposed by RBI on the BoB world, the bank was not able to provide certain services to new customers. But what they say, the management is saying that there are multiple channels that are available for these customers to do transactions, and therefore they don't expect much of an impact. But from a market perspective, I think this is a negative sentiment. Until that time they are able to resolve this, I think market will take the restriction with a pinch of salt and might be a little bit cautious on the stock. Also, as we see that margins have been pretty weak, and that is that the compression has been higher than some of the other peers, and which could again put some pressure in the near term in terms of the stock performance. But nonetheless, on an overall basis, if you look from a 2-year perspective, things look pretty good for the entire PSU space. There has been a healthy business growth. Asset quality has been pretty strong. And again, same valuations are comfortable. And hence, while we have a buy rating, I would again reiterate that in the near term, the stock could remain under pressure because of the NIM compression and the RBI restrictions on the BoB world onboarding.
All right, that was about the PSU banking space, but let's also shift focus to the aviation space now, Siddhartha. Of course, IndiGo reported great set of numbers. It has, of course, edged back into the black if you look at, the last year. But going forward, the management has also said that Pratt & Whitney issues could ground some aircraft from January, right? So that would be a concern. And of course, there were concerns around yields as well when it comes to the stock. Going forward, would you expect rough weather for IndiGo? What are your own thoughts?
Yeah, Nandita, I think IndiGo, pretty strong set of numbers. We have seen that the domestic travel tourism has picked up a lot of pace, and the kind of occupancy they have been reporting. And to add to that, on the cost side, fuel cost was something which helped them in this quarter. So overall, they reported a PAT of 1.9 billion rupees versus our expectation of a loss, and this was driven by lower than expected fuel cost. Plus, there were some supplementary rental incomes that they got. PLF, which is the occupancy of the plant, passenger load factor was at 83%, and that was pretty good. If you look at what we are seeing, we have our internal airfare tracker for the 30-day domestic forward prices. IndiGo fares are up by 30%. While for the 15-day prices are up by 37% because of the Diwali festive season, which bodes well for the Q3 numbers. And to harness this demand growth, the company plans to increase its fleet size from 306 aircrafts in FY23 to 350 aircrafts in FY24. They would be adding new destinations, especially on the global front and the international routes. There would be some rough weathers, as you highlighted. Yes, because of the recent hike in the crude oil prices, which could impact margins again. The issues with the engines, they have a huge fleet, so there will be only marginal impact because of some routes that getting impacted. But as we said, we expect the management has been also taking a lot of measures to increase its global awareness, where it expects to capture a higher growth in the international markets, which would drive the earnings. But as you said, in the near term, there are 2-3 issues. The domestic market competition is also intensifying with the resurgence of Air India, Tata taking over, and entry of newer players like AXA. So there would be some checks in terms of the prices going forward. And with the stock price already having moved up in the last few months, we currently have a neutral rating and a target price of 2,800.
All right, 2,800, that's the kind of upside that SAID, of course, expects on an IndiGo. With that, Siddhartha, thanks a lot for taking out time and joining in this morning and sharing your thoughts on some particular stocks with us. Look forward to touching base with you sometime soon.
Thank you. Thank you so much.
Well, with that, let me also bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Pleasure speaking to you this morning, Rajesh. The GIFT Nifty hinting at a very solid start for the Indian market. 19,400 are the kind of levels that we can see on GIFT Nifty this morning. But this week, as we step into Muhurat trading, do you expect the bulls to retest those 19,500 levels on the upside?
Good morning, Nandita. Yeah, so kind of recovery which we have seen in both the indices in previous week that clearly indicate that, yes, there is a room for further more upside in the current week, and possibly, yes, the kind of short covering which we have witnessed in the Nifty is clearly indicating that further more upside we can see towards 19,500, 19,550 in the continuation of this uptrend. So as of now, till the Nifty is holding above 19,200, 19,150 level, our trend is likely to remain on the buying side. Sentiment is also improving. Market breadth is improving. So that clearly shows that, again, buying interest is coming back to the street. And as we mentioned that, 19,200, 19,150 are the important support area. till these levels are intact, there is no as such worry in terms of this pullback, and possibly 19,500, 550 can be there in the current week itself. For Bank Nifty, as we are trading around 43,300 level. So 43,000 is the key important support area on the downside for Bank Nifty. Most of the put writers are taking their position around 43,000 strike. So that is going to act as a good support area. We have seen a lot of banking stocks have recovered from their recent low. So private and PSU, both banks are showing good traction in last couple of trading sessions. So we do expect that once Bank Nifty manages to cross over 43,500, then these may scale up to the level of 43,800, even 44,000 level also. But one needs to keep close eye on 43,000. That's the critical and important support area for this near-term trend.
All right, 43,000, a key near-term support level on the Nifty Bank Index. But let me talk about Titan now. We have, some brokerage calls coming in on this stock. Of course, it reported numbers on Friday. Strong growth when it comes to jewelry business. In fact, all around the company has reported good set of numbers. Goldman Sachs has a buy rating, target price at 3,525. In fact, it has raised EPS estimates by 1 to 2% to build in better growth going forward. And at the same time, UBS has a neutral rating, target price at 3,465 rupees per share. It has noted that the sales growth momentum has been strong, and it has raised EPS estimates for FY24 to FY26 between 3 to 4%. Looking at the stock, it is just about rubbing shoulders with its 52-week highs. Going forward, 3,500 levels anytime soon on this stock?
So, Nandita, it's a good quality stock. Continuously, we are seeing that stock is making higher top, higher bottom formation. If we analyze across all time frame, stock is in bullish territory. Yes, we do expect that yes, stock may again enjoy its all-time high trajectory. The kind of recovery which we have seen from the recent low, that was from at least from exactly from the 100-day moving average, and now stock is comfortably holding 50-day moving average. We expect, yes, 3,500 target can be there in the stock in coming weeks. So one can buy and accumulate the stock. It's a buy on dip kind of stock. One can keep this stock in their long-term portfolio also. So our view is also bullish, and 3,500 is the next positional target for the stock. On the downside, if it's give any opportunity to buy near 3,200, that's important and good support area on the downside. So one can buy and accumulate around those levels. Keep your stop loss at 3,150.
Right, that's the view on Titan. But another one, Zomato, that was up 10% on Friday, reported profits for a second straight quarter. In fact, we have brokerages, turning fairly upbeat on Zomato. They have target prices raised to as much as 140 rupees per share, almost at 120 levels now. Rajesh, how should one approach this stock now? Go all in at the current juncture?
So this is 6th, 7th consecutive month where stock is showing a strength, and the kind of recovery which we have seen from the low of 60 rupees, and now again stock is forming rounding bottom kind of formation on the monthly chart. Yes, we do expect furthermore recovery is going to continue as the overall structure is bullish. After a brief consolidation, stock again managed to view breakout on the weekly chart. Stock is moving in upsloping channel on the weekly as well as on the monthly chart. We expect that this momentum can extend, and 140, 145 could be the next positional target for the stock. Those who've already bought at lower level can trail their stop loss towards 105, and our positional target is 140.45.
All right, that's the view on Zomato then. But let's take up some viewer queries on that note. I want to kick off with a query on Titagar Rail. Hari Shankar wants to know your thoughts on what one should be doing with Titagar Rail at the current juncture. Railway stocks, as we know, after the good rally, most of them had come under a fair bit of profit booking. So, if one is, already invested in some of these railway stocks like Titagar, how should one go about, maximizing their profits now?
So very strong rally across the last few months, and for this calendar year, almost 250% kind of gain stock is enjoying. Looking at overall structure, we have our bullish view on the stock. If you get any opportunity in corrective move, you should buy and accumulate this stock, as overall structure is bullish and outperformance is there in this stock. Titagar Wagon, if you get a chance to buy around 750, 740 zone, that's a good level to again re-enter in the decline. You should trail your stop loss at around 700 if you have already bought at lower level. So 700 should be your stop loss. And on the higher side, once the stock crosses above 830 mark, then these rally can extend towards 900 to 950 also. So overall structure is bullish. Buy on dips is the strategy. Those who have already bought at lower level, they can trail their stop loss at 700 to enjoy furthermore upside in the stock in coming weeks.
All right, that's the view on Titagar Rail. Hope that answers your query. The next one is coming in from Harry on India Bulls Housing. He wants to know, how does this stock look on the charts? I think in the last 6 months, the stock has done fairly well. Even though, it has fizzled out a bit over the last 1 month or thereabouts. What are the next levels you'll be watching out for on India Bulls Housing now, Rajesh?
Some recovery was there, but still, if we analyze the overall structure, long-term structure is still weak, medium-term structure is still weak. In near-term, some recovery is taking place, but still 180 is the crucial level on the higher side. Until the stock not crosses above 180, it may struggle further, and maybe we can see further more consolidation in range of 155 to 180. This could be the possible consolidation range for next couple of weeks. Once the stock crosses above 180, then possibly we can see rally towards 200, 220. So buy on dips one can do in this stock, but strict stop loss needs to follow around 150. Our advice would be, if you get chance to buy around 160, that's the good level to re-enter in this stock to play the pullback action. But follow the strict stop loss of 150, as the overall structure for long to medium term is still in the weaker side. And I think if it breaks below 150, then we can see further more corrective action. So if you want to buy, keep your stop loss at 150. That's the view at this moment.
All right, 150, an important stop loss on India Bulls Housing. Hope that answers your query. But let me take up the next query on CDSL. This one comes in from Raman Singh, wants to know your thoughts on this stock. Of course, this stock has seen a stellar up move in the last 5 days. It has rallied over 10%. Going forward, do you think this is poised for more upside, or do you think some bit of a correction is waiting on the sidelines?
So Nandita, our view is bullish on CDSL. We have identified this stock for our Diwali Muhurat pick on the technical basis, and we expect the target of around 1900, 2000 in the continuation of this uptrend, which we are seeing since last couple of months. Very strong setup on the near term as well as on the short term basis. The stock is enjoying above all its important moving averages. We have seen most of the platform companies related to the broking are doing good, and the profitability is also increasing for most of the broking and platform companies. So looking at the overall scenario for these sector, we are bullish on CDSL. One can buy and accumulate this stock. Your stop loss should be at around 1450, and positional target we are expecting around 1850 to 1900 in the continuation of this trend.
All right, that's the view on CDSL, a bullish view coming in on this stock. But let's talk about Gujarat Fluorochemicals now. We have a query coming in, I think from Jiffin on this stock, and he wants to know your thoughts. Chemical stocks haven't really been doing all that well. In fact, if you look at Gujarat Fluoro itself, in the last 6 months, it has lost somewhere around 20% or thereabouts. But it has been attempting to make a comeback. Do you think the levels of 2700, 2800 are sustainable on this stock?
Most of the chemical stocks are still in the consolidation range. Some recovery is taking place, but still the major resistance are still intact on the stock. Stock is still trading below to its 50, 100, 200-day moving average. That clearly shows that, trend is still on the weaker side. If we analyze on the near-term setup, stock is now penetrating to its downsloping trend line on the daily chart. That is at around 2800. If it all stock crosses about 2800 on a weekly closing basis, then we can see further more recovery towards 2900 to 3000 level. That's again, major supply zone on the higher side. Yes, 2700 has taken is a good support area on the near term chart. Multiple times stock has taken the support around those level. So those who wants to buy or already bought the stock can keep their stop loss at 2700. On the breakout of 2800, yes, possibly rally can extend towards 2900 to 3000 level.
All right, that's the view on Gujarat Fluoro. Hope that answers your query. But this wraps up our query segment for today. But before I let you go, Rajesh, what are you flagging off for viewers this morning?
So I think real estate space, one can look at Godrej Property is looking promising. The breakout is already there on the daily weekly chart. We expect further more upside towards 1850, 1860 on the higher side. One can buy with stop loss of 1740. Another stock is Bharat Dynamics. That stock have delivered good set of number in the previous week, and on the weekly chart, stock managed to view breakout on the down sloping channel, and this is the reversal kind of formation on the weekly chart. We expect Bharat Dynamics BDL can continue furthermore upside towards 1090 to 1100. One can buy with stop loss of 1005. And the third stock that we like at this current juncture, that is PFC. We have seen very strong buying action in last week. The kind of recovery throughout the week is clearly indicating that, furthermore momentum we can see towards 275 to 80 zone. One can buy PFC with stop loss of 250.
All right, those are the stock recommendations coming in from Rajesh this morning. With that, Rajesh, thanks a lot for taking out time and joining in, and of course addressing all of your queries as well. But, before I go, of course, let me first talk about Cello World that will be listing today at 10 a.m. Of course, final issue price was at 648 rupees per share, and the grey market premium is hinting at a premium of somewhere around 20 to 25% upon listing. So we will be watching out for that at 10 a.m. But here's a programming note, before I go. JP Morgan's emerging economies head Jahangir Aziz will be joining in at 11 a.m. in an exclusive chat with Shweta Punj on why freebies announced so far won't have a negative impact on state finances and why he sees growth slowing down in the second half of the current fiscal. So tune in live at 11 a.m. For that exclusive chat. Well, with that, we are completely timed out on this edition of Morning Trade. Thanks a lot for tuning in. But of course, for all your other news and updates, stay tuned to Money Control. And the coming up next is Opening Bell, so don't forget to stay on for that.